Today, we're continuing the deep dive into grants and schemes that can help first home buyers get into the market sooner or reduce their upfront costs. And today, we're exploring one of the most talked about schemes for first home buyers, the First Home Guarantee Scheme. Hello, and welcome to First Home Unlocked, the podcast for unlocking clarity and confidence for first home buyers. I'm Jack Elliott, National First Home Buyer Specialist at Alcove.
And I'm Chris Bates, ex-financial planner and mortgage broker.
Together, we are on a mission to empower you with the keys to unlock your first home. Let's jump in. Welcome back to First Home Unlocked. How's the week been, Chris?
Doing well, Jack. I'm absolutely loving doing this with you, which I say every episode. But what's been news in your world?
Yeah, had a really busy week so far, which has been great, and just really looking forward to diving into this episode and really excited to keep sharing this knowledge through every episode that we're sharing. So today, we're continuing the deep dive into grants and schemes that can help first home buyers get into the market sooner or reduce their upfront costs. And today, we're exploring one of the most talked about schemes for first home buyers, the First Home Guarantee Scheme. So this scheme allows eligible buyers to purchase a home with as little as a 5% deposit and skip one of the biggest upfront costs, which is lender's mortgage insurance, or LMI. So in this episode, we're going to break down what the First Home Guarantee actually is, how it works and what guarantee really means, who's eligible, the key rules of the scheme, and other schemes offered under Housing Australia, the family guarantees. So let's start with just a quick refresher on lender's mortgage insurance, or LMI, because understanding it is key to why this scheme matters. So if you have less than a 20% deposit, most lenders will charge you LMI, and that's a one-off fee that protects the lender if you default on the loan. But here's the thing, LMI doesn't protect you, it protects the bank and can cost you tens of thousands of dollars. It's usually added to your loan, which means you're paying interest on it over the time too. So that's why avoiding LMI is such a big win, and that's exactly what the First Home Guarantee Scheme helps you do. So what is the First Home Guarantee? Well, the First Home Guarantee is a federal government initiative run by Housing Australia, and it's designed to support eligible first home buyers by helping them buy a home with a minimum deposit of just 5% while avoiding the cost of LMI. But here's where people get confused. You're not receiving any money. The government doesn't give you a grant or contribute to your deposit. Instead, the government is acting as a guarantor behind the scenes, covering up to 15% of the property's value. So when you come to the lender with a 5% deposit, the lender treats it as if you've contributed 20% because Housing Australia guarantees that remaining 15%. So this means no lender's mortgage insurance, access to better rates, and no government ownership in the property. And it means you can get into the market sooner with less deposit and without taking on the costs like LMI. So what does guarantee actually mean? In the context of First Home Guarantee, it means the government, through Housing Australia, makes a legal promise to your lender. If you default on the loan or the property is sold but doesn't fully cover what you owe, Housing Australia may cover the shortfall up to 15% of the property's value at the agreed time of purchase. So instead of the lender taking on the full risk of lending to someone with only a 5% deposit, Housing Australia acts as a back-end safety net. And because of that reduced risk, the lender agrees not to charge you LMI, and in most cases, you get access to standard rates, even with a small deposit. But it's also important to understand what the guarantee doesn't do. So you're still borrowing the full loan amount, you're responsible for 100% of the repayments, and the government doesn't give you money or own any part of your home. Their guarantee is simply a back-end agreement between the government and the bank. And importantly, the guarantee doesn't stop the lender from taking action if you miss repayments. And if you default, your home can still be repossessed and sold. And if the sale doesn't cover your full loan amount, you may still owe money even after the guarantee has been applied. To wrap that up, it's not a safety net for buyers, it's a risk reduction tool for lenders designed to help more first home buyers get approved with that smaller deposit. So Chris, this is a pretty huge deal for a lot of first home buyers. What do you see as the main benefit of using the scheme?
Look, Jack, when the first got announced, I think it was all the way back in 2020, I just thought it was going to be another sort of big log on the fire that was going to push up house prices. But in some sense, it does do that. It creates more demand, allows people to enter sooner into the market. So it brings forward future buyers. But it's a huge help for first home buyers. And first home buyers need all the help they can get to enter the market. And the big saving for them is that lender's mortgage insurance, which could be 2 to 3% of their sort of purchase price could maybe go in sort of lender's mortgage insurance, which is a lot of money that's just wasted. On top of potentially they pay stamp duty or just other costs to enter. So it just allows them to enter the market sooner with a smaller deposit and avoid paying that lender's mortgage insurance. Now, they did put a lot of caps on it in terms of, the income and the city caps, but we'll talk about this obviously a bit later in the episode. They've made some big changes to that, which really have expanded the scheme. And this really allows any first home buyer, I think, that really wants to enter, should be able to enter the market. And they haven't been ruled out because they were over the limits in terms of income, etc. So, yeah, I think it's been a huge success. I mean, hence why it's been around for 5 years and they're making it more and more, expanding the scheme. And I think we've helped hundreds of probably buyers, maybe not hundreds, definitely lots of first home buyers over the last 5 years that have used this scheme because it's a huge advantage to first home buyers.
Yeah, and I think you're right, Chris. The main benefit there is just getting into the market sooner. Instead of having to wait to save that bigger deposit, you can get in sooner, avoid that LMI cost, and be treated like you have that 20% deposit. So you're not missing out on rates. You're getting the best lender options available as well. And that takes me to my next point. So not all lenders participate in the scheme. So Housing Australia has partnered with over 30 lenders, including major banks and smaller lenders. So your broker can help you compare which one is right for your situation. Now, to qualify for the first home guarantee scheme, you'll need to meet the following requirements. Be at least 18 years old, be an Australian citizen or permanent resident, apply as an individual or with one other person. So loans with 3 or more borrowers aren't eligible. Right now, there's an income cap of $125,000 per year for individuals and $200,000 for couples. Now, from October 1st, 2025, the government are removing all the income caps. So what this means is more first home buyers will be eligible for using the first home guarantee scheme. You have to be a first home buyer or someone who hasn't owned a property in the last 10 years and have at least a 5% deposit saved based on the property value. And you must be buying or building a home you intend to live in. So investment properties aren't eligible under this scheme. So you also must meet the important live-in requirements. So if you're buying an existing home, you must move in within 6 months of settlement. If you're building, you must move in within 6 months of the occupancy certificate being issued. And for both kinds of property, you must continue to live in the property as your principal place of residence while using the scheme. So if you later move out or convert the home into a rental, the guarantee may no longer apply, and your lender could require you to pay LMI or adjust your loan. So this scheme is really designed for buyers planning to live in their home long term. So this scheme is for genuine first home buyers or those who have been out of the market for at least a decade and are starting fresh. So Chris, I think this is great news for first home buyers, especially people in higher paying roles who have been locked out of the scheme with these changes. What changes do you think we'll see in the market when this change comes in?
Oh, look, it's in the middle of July now. We're recording this and it's a bit of a winter lull in the market and I guess everyone's getting ready for spring and there's not too many news articles about the expansion of this scheme. There was when it first got announced back in the budget and the election time, but I think as the year ticks over, we'll start to see more and more articles making first home buyers aware. And if they start to speak to a broker or they go to a bank, etc., they might start to understand the scheme more and they'll be like, hang on a sec, I could probably buy now, particularly when there's stamp duty savings across the country. And I'm already at a 4% deposit. If I only get another 1% or maybe another extra 10, 20, 30,000, I could buy. That sounds good on one sense, but on the other sense is I think you'll find a lot of buyers are in the market. Unfortunately, demand can increase really fast, as in you can get pre-approved and be in the market. But supply takes a lot longer. You need investors to sell, you need first home buyers, apartment owners to want to upgrade to houses. You can't just miraculously bring more properties to the market. It takes many months. And I think you'll find that when you increase demand in quite a big burst, supply won't match that. And so you could easily see prices start to jump, particularly in areas where a lot of first home buyers enter. So they're not going to buy in every part of every city, but certain parts make really good bets, particularly in areas of the capital cities that were not available before in terms of the price caps were. For example, in New South Wales, the price cap at the moment is 900,000, but it's moving to 1.5 million. So anything between that 900 or 1.5 million zone, there'll be a lot of new first home buyers that weren't buying there prior, but now can buy. So yeah, I think that's the expectation. But ultimately, you probably wouldn't want to buy in that market unless you didn't have to. So if you could buy and avoid waiting when more new buyers are coming in, you'd want to take advantage of that opportunity. And sometimes when the income the way that they assess your income is they look at your last year's notice of assessment, not what your current income is. And so just be aware of that, because you might be able to be eligible even though you think you're not. So if you were under that sort of 125,000 for an individual or 200,000 for a couple last financial year, it's worth speaking to a broker just to see if you are available to be eligible.
Yeah, I think that's a great point that you raised there, Chris. It looks like, and the trend is that, yes, there's going to be more people available to purchase in the market. So that increases that demand factor. And I think it's a great point that you raised, that talking to your broker now, seeing what options you have available now before more people kind of flood the market would be a beneficial move as a first home buyer. Let's talk about refinancing while under the first home guarantee. So if your current home loan is supported by the scheme, you may be able to refinance, but only with a participating lender. So there's a few important rules. You can refinance to get a better interest rate or loan product, but you can't increase the loan amount, extend the loan term, or make any changes that would affect your eligibility under the scheme. And if you refinance with a lender that's not part of the scheme, you'll lose the first home guarantee and you may need to pay lender's mortgage insurance. So refinancing is allowed, but only to improve your rate or product, as long as you stay within the scheme boundaries. So once your loan to value ratio, or LVR, drops below 80%, that's when you can refinance out of the scheme and still avoid paying lender's mortgage insurance. So Chris, is there anything you want to add here?
Look, I think the main thing to understand here is that you're not really having a cost to purchase, right? And so if you can enter the market now without paying an additional cost like LMI, you've got the protection of, potentially also having a bit of a buffer in terms of not having to put every single dollar in. You've got to really consider whether you should be acting now versus, they always could make changes to this scheme as well. They could always pull the scheme, change the government, just change their mind, etc. So you just got to remember that this is a highly attractive scheme, and you don't want to probably sit on your hands and just assume that you're just going to enter, 6, 12 months later. I'd take advantage of this. A lot of first home buyer schemes aren't usually the best. They're pushing people to new property. We'll give you 10,000 if you buy a new property, or those type of schemes. They're not really allowing you to buy established property and good assets. And with the current limits going up, there's really no excuse to just say that, I can't get a good asset. I couldn't get something that suits me, because the new price limits in the capital cities really do encapsulate a lot of houses, a lot of premium, and more the affluent parts of the capital cities. And you should definitely be able to get a good asset for that. So yeah, if you can make it happen, I sort of urge a lot of first home buyers to take advantage of this, because it's a very attractive scheme for first home buyers.
Yeah, and I think that's a great point that you raised, Chris, about being able to access that better quality asset. Now, there is caps currently at the moment, which we'll go through soon. And yes, sometimes they may limit you in certain areas of Australia and certain capital cities. And we'll talk about the changes and what that's going to look like as well. So let's talk about the deposit requirements now. So to qualify for the scheme, your deposit must be between 5% and 20% of the property price. But here's the key point. Most lenders also require that your deposit comes from genuine savings. So for most lenders, that means the money must be held in your own bank account for at least 3 months. And you can't just receive the money today and then buy tomorrow. Lenders want to see that it's truly yours and it's been saved, not gifted or transferred in the last minute. So this is one of the non-negotiables when using the scheme. Even if you've got the right deposit amount, you can lose your place if you can't show that genuine savings. So this proves to lenders that you can manage your money consistently, which gives them more confidence in your application. So gifted funds or money from selling assets may not count as genuine savings unless held in your account for the required time frame. So always check with your broker or lender. Genuine savings rules can vary between the lenders as well. And it's not just about the deposit. So buying with just a 5% deposit sounds great, but it's important to remember that's not the only upfront cost. So on top of the loan deposit, you'll still need to budget for other expenses, including stamp duty, which varies by state and property price, lender fees, conveyancing or legal costs, building and pest inspections, moving costs, furniture and setup, and also keeping that cash buffer so you're not left with nothing after settlement. Now, we've covered all of this in detail back in episode 3, where we broke down the real costs of buying your first home. So if you haven't listened to that one yet, it's definitely worth jumping in. Now, Chris, in the first home buyer space, there's a lot of focus on that initial 5% deposit. But do you find sometimes buyers get caught out by all the other upfront costs that they need to cover?
Look, I think the big one you need to always be concerned about is stamp duty. So really understand what you're eligible for in terms of the state that you're purchasing around stamp duty concessions. We're doing a full rundown on that in future episodes. And so that might be the best place to start to understand what you're eligible for. But absolutely. I mean, the other costs, conveyances, building and pest, even moving costs and getting furniture, and even there's some settlement cost adjustments in conveyancing. You can definitely get yourself caught out, I think, with first-time buyers. But if you do move from a point of potentially feeling quite safe with your money to what we call the danger zone, I mean, that's probably leads us on to this next point, Jack, around what should you contribute if you can get access to a 95% loan? Should you take a smaller loan? Should you keep some for a buffer? So maybe we should go there.
Yeah, so as you mentioned, Chris, you might have more than that 5% deposit safe, but that doesn't always mean you should put that towards the loan. For some buyers, it makes sense to contribute just the 5% and use their extra savings for covering them upfront costs that we mentioned, keeping a buffer in their account for emergencies, and avoid being stretched too tight after settlement. Now, for others, it makes sense to contribute more if they're trying to keep their monthly repayments lower. So just last week, I had a client use the scheme with an 8% deposit instead of using that 5% minimum to meet their specific goal, keeping their monthly repayments under $3,500 per month. So that deposit size let them hit their repayment target while still holding on to enough savings to cover the upfront costs. And it's worth working with your broker using the schemes. You can have them buffers in place. Now, we do need to tell the banks what that is for. They allow 6 months worth of living expenses to be set aside, and also some moving costs, furniture costs, and things like that as well. So that's worth working with your broker to keep them buffers in place, and also understanding how much of a buffer that you can keep in place. So that's why it's important to work through these options with your broker, because the right deposit amount isn't just about what the scheme allows, but what fits your strategy and your budget as well. So Chris, do you usually help clients decide what deposit amount makes the most sense for their situation?
Look, I'm a massive believer in, sleep at night factor and cash is king and having buffers. So maybe it's worth, Jack, just explaining, if you have got to say a 10 or a 15 or even a 20% deposit, how do lenders look at that? Obviously you can buy with a 5% deposit. How much extra cash will they allow you to keep as a maximum buffer?
Yeah, look, it's very dependent on the lender and your situation. Now, if you have that full 20% deposit and you've already set aside buffers in place, obviously it's better not to use the scheme and open your lender options. Now, let's say, for example, you could use a 10% deposit, but let's say you had 13, 14% saved in total. Now, as I mentioned, we could break that down and show the lender that this is covering your living expenses for the next 6 months and then all them upfront and moving costs as well. Now, there isn't a specific rule as to how much you can have set aside as a buffer. It's going to be dependent on the lender and what they're willing to allow in that situation. But again, that's where talking with your broker and working that through together at the start and checking with lenders up front will help guide you as to how much of a buffer you can have in place. Does that make sense, Chris?
Yeah, absolutely. And I think the key thing is we've got to get your spot secured at each lender, right? And so it's probably worth just mentioning how that works and whether there's an expiry date on your pre-approval and whether you can lose your place. Has that been an issue sometimes with clients?
Yeah, look, what it does is it's lined up with your pre-approval. So let's say you get pre-approved with a lender that's participating in the scheme, that's going to last you 90 days. Now, your scheme spot is reserved as part of that pre-approval process. What happens is that scheme spot is reserved for 90 days. We can then extend both the pre-approval and the scheme spot for another 90 days. And then after that stage, if you haven't found a home or haven't used the scheme, we then have to go back to the start of the application process and reapply for that spot. So that's the way that we can extend it. You've really got that 180 days to get a property using the scheme in your first go. And then after that, you have to go back to that application process. So under the first home guarantee scheme, you can buy an existing home, a newly built home, including off the plan house and land packages, or vacant land with a separate contract to build. But the property must fall under the price cap, which depends on where you're buying. So we've talked a bit about the price cap, but it is a maximum purchase price allowed for properties under the scheme. So if the home you want to buy is above the cap for your area, you won't be eligible to use the scheme. So these caps are set by Housing Australia and vary depending on your location, with higher limits for capital cities and certain regional centres. Now, you can check the cap for your suburb using the Housing Australia price cap tool, which we'll link in the show notes. And that's a really great tool. You can plug in your postcode or the area that you're buying in, and it will show you straight away what the cap is for that area. Now, while these caps are helpful, it's still so important to focus on buying a quality asset. Just because something fits within a cap doesn't mean it's the right property for you. And long-term value, livability, and resale potential still matter. So as we've mentioned, Chris, throughout the episode, there are some upcoming changes to these price caps. So one of the biggest changes announced by the federal government is that these price caps will increase from October 1st, 2025. Now, we're going to link a comparison table in the show notes so you can see how these changes could impact your situation. Now, Chris, do you think the upcoming increase in the property caps will help people buy that better quality asset?
Yeah, I think when you look at those last caps in those different cities, like 800 in Melbourne, you probably can definitely still get a house, but you're probably not getting in the inner ring. You're probably looking at the sort of middle ring there. And, it's quite hard to get a good asset in Brisbane under 700, I would say. And even in Sydney at 900, I mean, you could definitely get into a little two bed, but once you go up to 1.5 million or $1 million in Victoria or in Queensland, that makes a huge difference for first home buyers. There are options that they can purchase that really expand. Now, it's not to say everyone's eligible or want to spend up to those limits, but if, for example, your income and you can borrow that amount, it really expands your options and into, more scarcer and probably higher growth assets as well. And so I think this really gives a good opportunity for first home buyers where maybe, yes, they could enter under this old scheme if they were eligible with incomes, but there was a real limit on the type of properties they could purchase, which made a little bit of a conflict of interest. Yeah, okay, I can enter now, but does that mean that I just have to buy something that I'm not super happy in long term, or something that maybe is compromised and isn't the best property? And I think it's a good change. And we might also see some stamp duty changes coming next year where maybe they expand eligibility for first home buyers in different states to sort of match these caps. I think that makes sense. And there's already been, talk about that in different states. So yeah, I think these are good news for first home buyers and really gives them a little bit more power, particularly at the moment when there's a little bit of an investment boom building. And it doesn't take a rocket scientist for investors to figure out there's going to be a lot more first home buyers. I'm going to buy where first home buyers are going to buy. I'm not going to buy regionally as much anymore. I'm going to go and buy where there's going to be a lot more demand. Unfortunately, what you could easily see is investors and first home buyers competing, but another reason why first home buyers need all the help they can get.
Yeah, and I think it's just giving first home buyers, as you mentioned, a lot more power. I think, especially for them other states, Western Australia, South Australia, and Tasmania, a $600,000 cap in the capital cities. I think a little increase and a little boost will help a lot of first home buyers in them other states as well. I think it's definitely well needed. And yeah, let's keep our fingers crossed that there is some shift in the stamp duty exemptions and concessions also meeting that increase in the caps as well. It would make a lot of sense. Now, what happens if you're a single parent or guardian? So let's also touch on the family home guarantee, which is a separate scheme designed to support single parents or single legal guardians with dependent children. So this scheme lets eligible buyers purchase a home with as little as a 2% deposit. You avoid LMI with the government guaranteeing up to 18% of that loan. Now, to be eligible, you need to be a single parent or legal guardian with at least one dependent child, earn under $125,000 per year, be an Australian citizen or permanent resident, plan to live in the home. And this is a big one. So you don't actually have to be a first home buyer to use this part of the scheme, but you must not own a property at the time of settlement. So Chris, what impact have you seen the family home guarantee make for single parents trying to purchase their first home or re-enter the market?
Look, we've had a number of clients use this over the years, and I think when you're buying single as a parent is really hard. You probably need home security more than anyone. And so I think this is a really positive. I don't really love the income cap, to be honest. I think that's makes it much harder for, because, a lot of singles can earn above that and they still need a home, and, housing affordability is such an issue. But yeah, any help, I think, particularly for single parents is really a good idea, particularly as, rental costs have gone up a lot in the last few years, and even rental security is not there with low vacancy rates, and, you might get moved around a lot, and a lot of investors are selling as well. So, that stability for families is really key. And so I think this is a very good scheme.
Yeah, and I think as well, removing that income will just help more people access that branch of the scheme as well, which again is another positive. So I just wanted to break down with some insights from the 23-24 Home Guarantee Scheme report. So while the 24-25 data isn't available just yet, last year's numbers show how quickly the scheme has taken off. So some interesting things from that report. 1 in 3 first home buyers used the schemes, which is a huge jump from roughly 1 in 10 when it first got released back in 2020. And thousands have already transitioned out. So almost 1 in 5 households have used the scheme and have already moved on. So that means many people have paid down their loan to under that 80% loan to value ratio, or they've refinanced to another lender, likely leveraging the equity they've built in their property. So these guarantee schemes can be incredibly powerful. They can help you get into the market sooner, save you tens of thousands in LMI, and open up property options that may have felt out of reach for you. And as we've mentioned, and just to summarize, what's changing from the 1st of October 2025, there'll be no income caps. So this means first home buyers with higher incomes will now be able to access the scheme. The second is higher property price caps, making higher quality properties more accessible for first home buyers. And the final is no place limits. So previously the government had limits on the number of places available per year. So Chris, are there any final thoughts for buyers considering using one of these guarantees?
Look, if you even consider it, just reach out. Let's have a chat. Let's figure out what you can and can't do and really understand your options. And there's no cost to do so and there's no impact on you, but just clarity gives you confidence, right? So yeah, it's a big episode, Jack. Lots we covered. But if you've got any questions, absolutely, definitely reach out.
Yeah, and we're here to help as well. And I think you're right, Chris. Considering your options now, seeing one, if you're eligible, what kind of property you can buy under the scheme, it'd be definitely worth checking out now rather than waiting and then trying to purchase and do that at the same time as a lot of other first home buyers jumping into the market at that time. So as you said, it's been a big episode. So that is the first home guarantee scheme plus a look at the family guarantees. So these national schemes can really accelerate your first home journey, but they're just one part of the picture. So next week, we're going to be diving into state-based shared equity schemes, and we're going to tell you what we really think about these shared equity schemes. So looking forward to that one, Chris, and I'll talk to you then.
Look forward to it, Jack.
Thank you so much for listening. We'd really appreciate if you could do us a huge favour. Share this episode with any first home buyers that you know so we can help more people like you feel clear, calm and confident when purchasing their first property. You can join our Facebook group, First Home Unlocked, to continue the conversation with other first home buyers. Or if you're ready to unlock your first home, you can book a get to know you chat by using the link in the show notes or by going to firsthomeunlocked.com.au. Before we go, just a reminder that everything we share on this podcast is general in nature and not tailored to your personal situation. We always recommend seeking advice from a qualified and experienced professional when making financial decisions.